On the carbon side of things, the roller coaster continues, and we are in the middle of what looks to be a new upcycle. I think this one's going to feel a little different than the prior two. About 10 days ago, so last Monday, we got a price hike announcement from Cleveland-Cliffs. They announced that for hot roll products, they were going to take the base pricing for hot roll up to $900 as a minimum, and further to that, none of the other steel mills have actually followed suit with any price hikes, at least not to my knowledge that I've seen. And a lot of times what that means is if the others aren't following suit, it kind of means that there may not be a ton of enthusiasm around, really jacking prices higher the way we had seen in these prior two cycles back in early 2023 and then back in Q4 of this year. And I think some of that makes sense because there are some dynamics that are a little different this time around, namely when we look the raw ingredient side of things. When we look at scrap, we look at iron ore. For the most part, they've joined along in the roller coaster over the last couple of years. But as we sit here today, I do think busheling scrap prices for this part of the cycle have bottomed, but we're not yet seeing, massive stockpiling, massive buying of busheling scrap. We are seeing a little bit of optimism, maybe plus 10 to 20 bucks in prime grades of scrap, but 10 to 20 bucks in scrap doesn't really substantiate $100 to $150 price hike in steel, in my opinion. And then you move over to the right-hand side, which is going to be looking at iron ore prices. Maybe iron ore is a little bit more linked to Chinese markets. We produce less steel from iron ore here in the United States, but it still matters. It's still a raw ingredient that goes into steel production for the blast furnaces. And those prices have actually kind of cratered over the last few months. We've gone from about $140, $145 all the way down to this week, we're down below $100. So there's some pretty rapid deflation still happening within the iron ore side of things. So these two things in summation don't really scream to me, jack prices to the moon. I do think that we have seen, at least for the short term, we've probably seen a bottom in carbon prices. I just don't see a whole lot of evidence from the normal indicators we would look at, whether it's, lead times or raw ingredients, that would suggest that we're going to see a big wave or a big barrage of price hike announcements. And I think that's evidenced by the fact that you didn't see any other steel mills follow suit with Cliffs last week. And futures are kind of saying the same thing. This is a little bit of a tricky chart for those who have the visuals. But for those who don't, what we're looking at is the futures market about a month ago was pretty optimistic that we were nearing a bottom. Price hikes were going to take place and we were going to see, a couple $100 of inflation in the price of all things carbon sheet. And that's evidenced by the blue line. The green line is going to be as of a week ago, where you still saw optimism. The price hikes were fairly fresh. A lot of people said, okay, here it goes. We're starting a new price cycle to the upside. And then we saw that none of the other mills followed suit. We're seeing evidence that some of the raw ingredients markets aren't really taking off to a large degree. Even though we are seeing some other things like copper moving higher, crude oil moving higher, steel really isn't following too big of a trend or isn't really following along in that path. And that's evidenced by the orange line, which is actually showing that if we fast forward to this week, we've seen a fairly substantial sell-off in futures markets, which to me says traders are basically saying, we think prices are going up, but we don't think they're going up by that much. They're kind of saying we think things may get to $900, but if they get to $900 for hot roll, it's not going to be all that long-lived. And then maybe we see some stabilization around those levels. And I don't know, for myself as a market prognosticator, I kind of think that would be a healthy, welcome thing for the market, that we could actually get something a little bit more tight range, somewhere in the realm of $800 to $900. I think that's an area where, steel mills can make some money. I think end users can buy steel comfortably and confidently and still, make good margins on their finished products. It never works out that way. That maybe this is just wishful thinking, but that's what the futures market is saying right now, is that we may actually see a slightly tighter band on steel futures. But again, this is just a snapshot as of this week, this point in time, based on what we know today. Things often change. That's why we do Cup of Joe every single month. That's why we like to stay on top of these things, because more likely than not, this marketplace will also change as market conditions evolve. What's interesting is we're beginning to see a redevelopment of the spread widening between hot roll coil and the value added products. And this kind of comes back a little bit to sort of what Chelsea was talking about on the HVAC side. I do think that some of the galvanized end markets are really running strong. And if we revert back to the end market activity, HVAC shipments are one of the bigger, growth end markets. They're fourth from the far left, which is suggesting right around 10 or 11% growth rate, which is a pretty healthy growth rate on a year-over-year basis. And what that's doing is that's feeding into a larger premium for those who buy galvanized steel just to get, but that spread from hot roll to cold roll now is inching closer and closer to about $400. So historically, from about 2010 to 2020, I'd say the average spread between hot roll and cold roll, or hot roll and like the galvanized base price, would have been $150. Those days appear to be behind us, at least in the short term. And you can see, we got all the way up near $650 for a short period of time back in 2022. I don't think we're heading back to those types of levels, but we're certainly seeing a bit of a squeeze on cold roll and galvanized products as it relates to the pricing to hot roll. I think that's just a function of some of the end markets, automotive, HVAC, things like that are keeping those markets tight. It's causing those premiums to blow out fairly substantially. And with that said, I don't have a chart on this, but it is worth noting that some of the base metals moves that we're seeing across copper, and we'll get to aluminum here in a second. It is worth noting that just in the last couple days, we've seen about 6 to 8% price moves to the upside in the price of zinc. So what that's going to do is, in addition to the premium, just to get to the coating base, you're also going to have coating extras that may be going up if this trend continues, if zinc prices continue up the way they are.
The zinc is the primary coating, right, for galvanized.
That's right.
Is that right? Okay.
Yeah, basically it's literally like a molten zinc bath. It's that has the hot roll, cold roll run through it. Yep.
Yeah.
So those things tend to have a little bit of a lag effect. So we may not see, if this trend continues with zinc prices, we may not see that feed through till maybe the summer months. But I would expect if this trend holds, we would see some coating extra increase announcements from the mills.
Is there a typical threshold that usually kicks in
Yeah, I mean, I would say it's more of an art than a science, but there is definitely, if it has a substantial move, call it 8 to 10%, I would suspect that you're going to see the mills watching that and eventually passing that through fairly quickly.
Makes sense.